Hey everybody, I have another little lesson for you today about crypto trading. Today we're going to talk about price action in crypto, how to trade price action. So price action is one of the only ways to see a pure and direct insight on the live market sentiment. So we can confirm this movement and signals on the chart. And to be a price action trader, you have to navigate varying price action types, okay? So there's things like fast price action, slow price action, more volatile price action. Okay, these can be seen as the moods of the market. Now let's talk first about heavy price action. What is it? So heavy price action refers to periods with high trading volume and significant price movement. It often indicates strong buyer or seller interest or possible volatility. Okay, what are some of the ways to spot heavy price action? Large tick sizes on the order book, fast tick speed, larger candles, bigger wicks, higher volume. So when we are trading price action, right, we'll typically use the order book, which I'll talk about in a future lesson, or we'll be using the chart to help also notice what the price action is like, how the candles are being painted on the chart. Now, just to give an example of heavy price action, right, you can see often these very big wicks, these larger candles, right, more volatile, aggressive moves are often present in this type of situation, okay? And of course, right, remember that traders can make money long or short. So heavy price action is going to be a way to usually get some bigger gains a lot of the time just because there's probably bigger percentage moves. Now, if we look here for a live example on the Bitcoin chart, right, this is the hourly chart. We're seeing a lot of heavy price action, okay? Even during this downtrend here, I want you to notice how big the spikes are on the slight bounces, and then we instantly fall back down pretty aggressively. We had a big dip here. We had another big dip over here. We had these big spikes up here. So this is typical heavy price action, okay? Now you might be wondering, right, an example of low price action. So let's talk a little bit about that next, okay? Before we do that, I just want to give you some pointers about trading in heavy price action, right? You should consider using lower leverage because there's a little bit more risk involved when you're trading heavy price action, right? It's more aggressive moves. You should also typically use a slightly bigger risk to reward ratio because you can a lot of the time manage to get some bigger gains from these bigger price moves, okay? But lower leverage is often necessary. You need to make sure that you catch the right side of the move, right? Due to the bigger volatility, you don't want to be caught on the wrong side of the trade, okay? You should check that your trade is playing out fairly quickly. Within minutes or an hour or two, your trade should be moving in the right direction most of the time. And also consider exiting the position if the price action reduces a lot, right? So if there's a slowdown in price action and it's taking too much time, that might be a sign that it's going to be a losing trade, despite there initially being signs of heavy price action. And you can consider removing or widening stop losses. Let's get into low price action. Okay, low price action involves minimal trading volume and little price movement, often seen during off-market hours or in stable, more trending markets. Once again, some of the things to notice this low price action is going to be small to medium tick size on the order book, slower tick speed, smaller candles, less aggressive wicks, and lower to medium volume. Okay, an example of this right here, which I like a lot, is going to be these smaller candles, a more steady trend, right? Doesn't mean that the market is flat necessarily, although it could be, but it really means that there is a more controlled movement going on in the chart, right? These smaller candles are a good indication of some low price action that might also be seen on the volume indicator as well. Here, you're typically going to want to notice either a range, so something more flat, or a trend, whether it's an uptrend or downtrend, but steady, or a range-bound price action, okay? So not something like here where you have these very aggressive spikes. You'll also typically notice compressed or slow price action that will be present, right? The price should be fairly compressed in this type of situation. Let's go ahead and maybe move a little bit backwards and see where there might be some low price action. I see one already. Take a look at this area right here, okay? You'll notice how the price is more compressed. We have less aggressive candles and wicks, almost no wicks. And then I also want you to pay attention to the volume indicator, right? You see that in this area, the volume was substantially reduced compared to before. So once again, a great example of some lower price action there. Let's go a little bit more backwards in time, see if there's anything else. I see one again. I actually see two here. This is a fairly good example right here, right? Where yes, it doesn't mean that we're not going to have a spike, but overall we're still quite compressed in this range and just seeing a slight uptrend here. Once again, we have that lower volume present on the volume indicator, and then we have some bits and pieces here of this lower price action in this area here, in this overall consolidation. We did have one unexpected spike though. So this is a good example here, right here for low price action. And some tips, again, for trading in low price action. You can consider using higher leverage, right? Because the risk, due to the lower volatility is less. So you can put your stop below support, for example. You can use a smaller risk to reward ratio, right? Because the actual percentage moves is a little bit less than in heavy price action. You can give your trades more time to play out because, of course, we know that we're playing a slower trade, okay? And you'll typically want to exit if all of a sudden, like over here, you see a big spike in price action and in volatility, okay? And you will typically be able to use tighter stop losses below support or above resistance to further minimize risk. That's going to be it for today. You can take a look at this conclusion page, which talks a little bit about what we discussed. With that being said, if you want more trading insights, make sure to join the Mastermind Trade Club Telegram group. Link in the description down below. Thank you for watching.